$1 trillion in fiscal stimulus and $5 trillion in monetary stimulus in 2 years, almost half of GDP, and we're already falling into a recession again despite that, okay? It shows what I'm saying. The economy is weak because the baby boom peaked back in 2007. We're in the weakest part of that downturn demographically, the biggest demographic downturn in history, until about 2024, still a year and a half from now before we start to recover. So this downturn is going to have to be deep to wash out all the debt and all the bubble stuff. We can't just come roaring out of this and say we're over it. This is the first wave down. We may be close to the end of this bounce. So consider, here's how it goes. A first wave crash down, two-wave counter trend, okay? Retraced 40 to 50%. We retraced about 40% now, so this could be over soon. Then you get the next wave down. That's called the three wave. That should be the same size and length of this wave or more. So we're probably going to see another wave down from sometime this month into January of next year. And if the market's down into January 2023, just the January indicator would tell you the whole year is going to be down. So that'd be the next wave. Then you'll get a bounce, and then the final wave will come into late 2023 or early 2024. That's what you should expect after a bubble of this magnitude, especially one that's been stretched and stretched and stretched. The economy's never been able to wash out all this excess. 600 trillion of financial assets that are more overvalued than any time in history. Frankly, and I show this in my newsletter, we've been telling our subscribers is we have $600 trillion now in financial assets, 6.5 times GDP globally, and that normally would be 2 times GDP in normal times. So this bubble has to unwind. That means hundreds of trillions of dollars of financial assets. What is that? Real estate, stocks, bonds, commodities, gold included in there, all have to deflate back down to normal so we can come out of this. And we have to flush out bad debts, the highest debt ratios. Can't even compare the debt ratios globally and domestically to the roaring 20s and past bubbles like this. So people need to understand, this is the greatest financial asset bubble in history. There is no soft landing to this, period. There is no magic way to get out of it. Now that this thing is cracked this far, I've been telling our subscribers for months and years now, it'll come to a point where they keep stimulating, but it's not enough and the economy breaks down anyway. We are in the beginning phases of that, and it's very, very likely this is going to continue. So don't listen to all of the clueless economists that never thought this could happen in the first place and saying, well, this will be a mild recession and the worst is over. I am telling you, it is not. And you are risking your assets if you do not take this seriously. All you got to do is be more conservative, be in the highest quality bonds while this crisis is happening. Now, all you need to be is out for about 2 years to let this happen, okay? If I'm wrong, you'll miss some minor gains after things have gone up so much that they're so overvalued. If I'm right, you're going to save your assets while most people you know are going to lose them and never get back to even again.